Well, it's not every day $15 billion is thrown around for a takeover of a Canadian company. A huge deal here and in China, too. In fact, it's the biggest foreign takeover ever attempted by the communist state, with its ever-expanding economy and increasing appetite for Canadian energy. Calgary-based oil and gas firm Nexen Inc. has agreed to Beijing's bid for a takeover. But it's not a done deal until Ottawa approves. Our senior correspondent, Terry Malefsky, explains that. Terry.
Well, Peter, we're about to find out just how far the Harper government will go to cozy up to China. After energetically wooing Chinese investment, it's going to be hard to say no to a $15 billion takeover, especially when most of the assets being sold are not in Canada.
Nexen may be headquartered in Calgary, but it's an international player with projects all over the world. It's a leading oil producer in the North Sea and has wells off the coast of Nigeria and in the Gulf of Mexico. Nexen also has shale gas operations from Colombia to northeastern BC, and it has an interest in a struggling oil sands venture at Long Lake, Alberta. So, China's state-owned offshore oil corporation, CNOOC, is after global assets, not just Canadian ones.
Well, it's 11% of Nexen's revenue comes from Canadian sources and 28% of the production. So 72% of production is from out of Canada. So this is not necessarily really chipping away at Canadian assets.
CNOOC's boss, of course, says it's a win for Canada.
For Canada, this agreement provides a stable source of investment for the many projects that Nexen operates.
The takeover will roughly double China's existing stake in Canada's oil patch. A foreign investment review is required to see if the deal is a net benefit to Canada. But Prime Minister Stephen Harper has dropped his previous distaste for dealing with communist China and has repeatedly told its leaders that Canada is open for business.
I do not see the federal government to have any reasons, after enthusiastically endorsed Chinese investment, ask for more Chinese investment, and then turn around to reject this.
That seems like a good guess, judging by the reaction of Trade Minister Ed Fast.
We want to be one of the most attractive investment environments in the world, because foreign investment does drive economic growth within Canada. It does ensure our long-term prosperity.
The NDP's reaction was notable for what it did not say. It demanded a full public review of the sale, but not that it be blocked. And the Chinese are leaving little to chance, promising to keep Nexen's management and staff in Calgary. As for shareholders, they get a nice payday, $27 for shares that were trading at $17 last Friday. And nobody, Peter, said a word about godless communists.
Terry Malefsky in Ottawa tonight. Thanks, Terry. Well, our senior business correspondent, Amanda Lang, is here now. Why is this one important?
It's important because it's not happening in isolation. China's already a sizable investor in Canadian energy assets. In fact, this year alone, 52% of its foreign investments came to Canada. With trillions at their disposal, the number is likely to grow. This deal doubles the money that they've put into the oil sands in just the past few years. Now, until now, that was mostly partnerships and joint ventures rather than outright takeovers. And just today, another Chinese state entity, Sinopec, bought the UK assets of Canada's Talisman Energy. That's a $1.5 billion transaction. But meanwhile, CNOOC has gone out of its way to reassure with this bid. It's promising to keep the head office here. The premium it's paying on the share price, all of it shows that they're very well aware of the regulatory hurdles.
All right. You know, it's hard to gauge these things on the day of in terms of what kind of public reaction there's going to be. But there has been data put together in terms of how Canadians feel about Chinese buying.
Polls over time of what Canadians think of Chinese investment versus other foreign direct investment show they are more nervous about Chinese investment. Having said that, our government has made a concerted push to invite it, so we know where they stand. And as Terry noted, only 28% of the assets are actually in Canada. So from that point of view, that's sort of a different story. We should note, though, that they're all oil sands assets. And at this time, almost 1/5 of the oil sands are under some form of Chinese state control.
And that's all been in just the last couple of years?
In just the last few years.
All right. Amanda, thanks very much. Thanks. Amanda Lang.